office market started 2021 off with a whimper. Slowly but surely, the year saw increased business optimism, a greater desire by many to get back to the office, and a real need to firm up workplace strategies, all of which contributed to an elevated level of office leasing. 10.1 million square feet of office space was transacted across central London in 2021, which was up by 55% on the previous year. This is a healthy rebound in activity considering the year we had. And with this heightened level of demand, we've started to see a few trends appear, like a shortening of lease lengths, increased appetite for pre-letting, and a reduction in the average deal size, despite a return of the mega-sized deal. The attraction of newer spaces and best-in-class offices has led to a high volume of leasing for Grade A space, accounting for 50% of all take-up. Going where the best space is has also contributed to robust leasing in traditional markets of the City, West End and Midtown. The City was slow to see leasing activity return in 2021, but the latter half of the year enabled a quarterly take-up rise of 84% in Q4. Leasing in Midtown was up by 90% on the previous year, and in the West End, lettings were up by 2/3. Fueling this demand has been a diverse range of businesses. However, just over half of all space transacted was by 3 sectors: technology, financial and legal. Yet it was the smaller sectors that stood out for me, such as recruitment agents, charities, education and healthcare firms, which all saw strong leasing activity in 2021. Increased demand has started to have an effect on the level of available office space across central London. 3 markets recorded a dip in availability: South Bank, Midtown and East Fringe, but not enough for the total figure for central London to fall, creeping up further to 23.1 million square feet. However, I do think we are at a tipping point of availability, as the pace of rises are now at the slowest rate since the pandemic started. Nevertheless, levels remain significantly higher, and the amount of Grade A space available is the highest since 2004. Rents are dictated by both demand and supply, and at the end of the year, there was not a substantial enough shift to revise those rents, but pressure to increase is strengthening. We are, however, seeing rent-free incentives squeezed somewhat in Q4, and this is a primary indicator for rental growth further down the line. We have great expectations for 2022 for what lies ahead for businesses who look to embrace those lessons learned over the past couple of years and embed trends into workplace strategies. The past year challenged how businesses operated and interacted with their people and clients alike, whilst embedding various versions of hybrid into their working models. This period of evolution for the office and the workforce is an exciting time, and one that is filled with opportunities to create a new redefined role and purpose for the office. The workforce is expected to get a louder voice on workplace decisions. Hybrid working will dictate a whole host of elements of the office, and flexible office solutions will gain a greater appreciation by businesses. 2022 will be a pivotal year for many who will embark on a genuine net zero workplace journey, invest in more technology, or deliver an office design that helps attract and nurture talent. As we progress into the new year, the core fundamentals are indeed shifting, but the market continues to offer opportunities to those businesses with active searches, but the window is closing for certain space types and locations. The workforce and workplace are to take centre stage in 2022, and providing an effective platform for the two should unlock a number of benefits for businesses.